Chinese EV upstart Leapmotor is pretty upbeat, despite not even cracking the top 10 in domestic EV sales this year through May. Sales picked up in June, but so have industry headwinds, from prolonged weak demand and a bruising price war to trade barriers going up overseas. So how does Leapmotor, dare I say, make the leap? Leapmotor likes to think of its DNA as being rooted in electronics. In fact, 60% of all the components in these cars are made in-house, including all of the electronics except for the individual battery cells. In fact, the head of the motor and gearbox division is a software engineer. Leapmotor founder Zhu Jiangming is confident their electrical expertise will eventually set the 9-year-old but still unprofitable Leapmotor apart, while also driving down costs.
The change in China will happen very fast, maybe even about 3 years. The market of battery electric vehicles plus hybrid models will account for 90% of the total sales. It widens the gap between China and the world in the transition to EVs.
Leapmotor's flagship EV is the C10 SUV, packed with advanced driver assistance technology and a starting price of about $19,000, one-third cheaper than the basic Tesla Model Y in China. Trade partners like the US and Europe say industrial overcapacity, state subsidies, and in some cases, ties to the Chinese government give Chinese EV makers unfair trade advantages. Zhu, by the way, also founded Chinese surveillance camera maker Dahua Technology, which is sanctioned by the U.S. for its alleged ties to China's state security apparatus. Zhu is adamant that Leapmotor and Dahua are separate entities. Nevertheless, 1 in 5 of all vehicles made in China were for export in the first quarter, a trend that's rising.
We indeed have received government support, but our contribution to local tax revenue is little, as we have not yet made a profit. Our sales are also limited. It's not like what the West has imagined.
The risk is that jobs, industries in our home countries, the United States, Germany, France, Japan even, start to melt away as this juggernaut called China just overwhelms markets because it's lower cost, higher quality, and more efficient. That's where we are, and it has boardrooms worldwide really nervous about the potential for this outcome from China.
And that's where Stellantis comes in. The Chrysler and Fiat owner in October signed a $1.6 billion partnership deal for a 21% stake in Leapmotor. Stellantis gets access to Leapmotor's EV tech and cost controls, while Leapmotor gets, well, a production entry point into Europe. All right, this is the subcompact hatchback T03 from Leapmotor, and this will be the first model that will roll off with the partner Stellantis. So many Europeans might have their first exposure to Leapmotor with this little guy for a $7,000 car. That's the entry price in China. European pricing is not yet set.
Indeed. If the EU or other places in the world raise tariffs on EVs and impose more restrictive measures, it may have an impact on the globalization of Chinese EVs.
And yet, Zhu says they'll open showrooms and start sales in at least 9 European countries and 3 other regions by the end of the year, allowing Leapmotor to perhaps avoid some of the obstacles other Chinese EV makers may face. Stephen Engle, Bloomberg News, Hangzhou, China.